The venture capital industry invests billions of dollars every year in climate tech companies. But a gap remains at early stage when the company is considered too risky or too young to be financed by professional investors. So what if there was another approach? What if communities of regular individuals like you and me could finance those startups? To unpack this topic, I'm joined by Helena Wasserman, the founder of Investors for Climate, a global community of over 400 climate investors across 24 cities in the world. In today's episode, recorded live at Change Now in Paris, Helena shares a playbook for scaling community with intention, how she makes investment opportunities accessible to a wide range of investors, and what most VCs still get wrong about climate investing. You are listening to VCO2, the Climate Investing Podcast. And before we start, please don't forget to like, comment, and subscribe if you're on YouTube, or to give us a follow and a 5-star review on Apple Podcasts and Spotify. This really helps the show. So thank you so much for those that will do it. And let's dive in. This episode is sponsored by Dealmaker. Dealmaker helps cleantech companies bypass traditional funding barriers and raise millions on their own terms by going directly to investors online. For example, EnergyX raised over 75 million from 40,000 investors using Dealmaker's solution. So if you're ready to fuel your vision, visit dealmaker.tech to learn more. Thank you to Dealmaker for sponsoring this episode. Helena, welcome to the show. We are recording at Change Now, the world's largest climate tech event taking place in Paris. So before we start, I must say thank you to Change Now for putting this event together. And I guess to get started, can you tell me a few words about Investors for Climate? What is it exactly?
With pleasure. Well, thanks so much for having me, Hugo. It's a pleasure to be here. So Investors for Climate, we're basically a community of now 400 climate investors. So we have 3 types of investors: family offices, VCs, and angels. And as we, as the word, our name, Investors for Climate, is quite descriptive, right? So it's very simple. We're here to educate investors. We have ambassadors in 24 cities, soon to be in 40 cities by Christmas. So we are in big financial hubs like Paris and New York, but also in like smaller hubs that are less connected, like a Mexico City or Cape Town. And our goal is to connect investors with the global community of investors and obviously to support founders with capital.
And when you say you have VCs and family offices, and I guess the rest are like retail investors, like how do you make sure that they can all join the same startup rounds? Because obviously they have different amount of cash to invest in the startups, right? Like how do you manage that?
Well, we have different, you can join in different tiers.
Okay.
But the reason why we created the network is really to build relationships. And then to get capital together. We also have an investment syndicate. Mm-hmm. So we actually group capital in specific opportunities as well.
That makes sense. Well, I guess to talk about the story there, I'd be curious to learn more about what sparked your interest in launching a community of investors. It's not everyone is launching a community of investors. A lot of people go to VC or more traditional way of investing. What's the story behind it?
Absolutely. So, I think if you want to make a difference and if you want to be effective, you also need to think about what's your unique sales points, like what's your unique advantage, what you're uniquely built to do better than anybody else, right? Because there's a lot of things we could do, but you better find something that, you're really good at.
And what's yours?
So that's a good segue. And since myself and my co-founder, Christina Mourlevar, who's in Singapore, I'm in New York, we've both always been super connectors. We have a lot of relationships, we thrive with relationships. So we had this kind of like unique advantage. And so when we thought, okay, what can we do in climate investing? We thought, well, first, let's bring all these connections that we have that have a lot of capital, whether it's families in Singapore or high net worths in New York. Let's gather these people and make sure their money's going in the right places. So that was the starting point.
And how did you build the track record so that people trust you? Because obviously, if I'm going to invest with a community, I want to make sure I trust the people that are leading the community and I trust them to do a good job, because obviously I have money at stake. Like, how did you build that track record yourself?
Yeah, no, that's a very good question. And as you rightly pointed out, fundraising and backing solutions is all about creating trust. So how do we build that, right? Well, for us, it's been first about building personal relationships.
Mm-hmm.
That started to create trust. And then slowly now we're building trust with, people feeling comfortable putting their money within investments that we either spotlight or recommend because we're actually investing in there. So to answer your question, first we did the personal relationship building, and then we focus more on investing.
How do you build 400 relationships?
So we started as an organic community, word of mouth. You had to be referred to get in the network.
Okay.
It was free initially, obviously, so that helps to grow fast.
Yeah.
And then once we had a good, about 300 investors, we started then starting with premium membership. So then investors had to, pay in order to join. So we have the freemium model.
And I guess growing to 400 is easy. Or like, how do you maintain relationship? Because I mean, I don't know, like I can maintain probably like 50 relationships on average, but like doing 400, it seems like quite a lot. And I mean, you're not texting someone right now, so obviously, like, how do you do that?
AI? No, I'm kidding. No, not at all. These are all personal relationships, as you said. To be honest, we're working on that. But I think it helps that we have ambassadors in 24 cities that are also, representing us locally.
That makes sense. Let's get a bit more tactical. If someone wants to build a community, what's the 10 first steps, or maybe less than 10, but like, what are the first steps to do that? Because you said you built relationships before, but then, what's next? Like, how do you go from there?
No, that's a great question. And actually, the best communities are the ones that be very clear on what they don't stand for. The more rules, the more difficult you are, usually the more sticky the community becomes. So I'll give you an example. Nike has an amazing running group, and they started saying, we're for runners who hate running. We're like for the runners that are not real runners, and so you want to exclude people from the get-go, to be very clear. So I would say the first thing is having a lot of rules to make it very niche.
Yeah.
The nicher it is, the more sticky it becomes.
That makes a lot of sense. And I think it goes back to also like same thing for like building a media. I mean, this podcast I think is growing right now because I'm only talking to people that are investing in climate, which means like if you're not either a climate investor or someone that's building a startup or like an operator in a startup for climate, like any of those roles really, I mean, apart if you have a really specific interest for climate, but like you really don't fit into like the audience. And I guess that's a learning for me as well. It's like the more niche you go, it feels like the faster you grow actually, which is opposite to a lot of what people think, no?
Exactly.
Well, going back to the community. So let me get it straight. So like you have an angel syndicate. So like an angel syndicate, if I describe it very simply, it's like you have people that come together, they put anywhere between like, I don't know, maybe 1,000 to like 50,000 and then they invest in a company, right? Like that's the first model that you have, correct?
Correct.
And then the other model is that you just bring deal flow to these investors and they can invest on their own. Like what's the model there?
Exactly. So there's two models. One is the one you described, investment syndicate, where we actually, coordinate investment opportunities through a platform called Odin.
Okay.
And then the other one is just spotlighting opportunities. So surprisingly, we thought, if you just spotlight opportunity and you don't actually group capital, is it really going to get transactions done? But actually, spotlighting opportunity is what most investor networks do.
Okay.
And it actually gets a lot of investors and investees to meet and deals to happen. So it's two things: spotlighting, so it's just showcasing them, and then actually coordinating via our investment syndicate.
So for the syndicate, you do the entire analysis, due diligence and everything.
Correct.
And for the other one, what's the model? Like, do you take a fee when they invest, or like, how does that work?
So our business model works on membership fees.
Okay.
That's all we take. And then we don't take transaction fee on deals that we spotlight.
Super interesting. Well, I guess let's talk about why community matters for climate and impact investing. What's the value of having a community behind you when you're a startup?
Well, in our experience, what we've seen is, for example, founders really like that we, when they present to a group of investors, they'll meet angels, but they also meet families, they'll meet VCs, and they know that maybe, the family might not come into this round, but it might be very important for the next round. And so I think that's a big, sales point in the sense that they get to build relationships with all kinds of investors that could be relevant right now or in the future. So I think, especially early stage, it's important to start building those relationships, and then you never know when they'll come handy.
Sure. And when do you start investing? What's early stage for you?
So we are seed. So we don't do pre-seed, we do seed. We do allocation 100 to 500K, and we invest alongside VCs or climate VCs.
And how many members do you need to reach like 500K, for example, with a syndicate on average?
It varies, right? But usually we get typically between 10 and 30 investors that would come into every opportunity.
And that's where I think there is an interesting idea there, because I think for a startup to get between 10 and 30 investors, maybe those people, I don't know, they are directors at like whatever company that might be a client for you later, or like that's, I think, how have you seen that value creation happen for startups when they have that many angel investors in the cap table?
Well, absolutely. I think that's super important. But also, when we launched this, we were overthinking things. We're like, what should be unique about us? Like, why would founders want our money? We were like thinking about this. Should it be that we are former entrepreneurs that exited? We're like really thinking about it. And then once we started doing deals, we realized that founders were just like, we just want to close quickly. Like we just, as long as we're aligned and, we will do a good partnership, we just want to finish this round, close and get to business, So that was what we realized as we go, is like actually founders, yes, they want great investors, but they also want to make sure the round closes ASAP.
And how fast can you close?
Average would be 4 weeks.
Okay, that's actually much faster than a VC,
Yes, that's definitely the goal of coming to a syndicate. Yeah.
I love it. Well, I guess part of the idea there that I find interesting is that because you have access to so many people, you have collective intelligence when you do your due diligence. How does that work?
So I think the how global is the network is interesting in also not just for founders but also for investors. So for example, right now, obviously what's happening in the US, in Europe, in Asia, it's so different, right? And the fact that we have global calls where we can talk about what we're seeing locally as investors, it does help to inform what's happening, because you see the general media, but it's interesting to hear what's happening from the perspective of each fund in each of these locations.
Yeah, for sure. I guess it's probably not the best time to invest in the US, is it?
Well, it seems like in the US, most people are on standby right now for the obvious reasons.
Unfortunately. Well, I guess to continue on that community aspect, what's the next stage? So like you come at the seed stage, how do you help startups beyond seed and, after you invest actually?
So we're actually pretty hands-off in the sense that once we do the investment, other investors that came with us can, be more involved with the startup. We focus more on, making sure we do as many deals as we can. But then we have a founder program, which is a fundraising program. And this is separate from our investment syndicate. And then what we do is we support founders. We're giving them exposure to all our investor network through all our events. So we have, events in these 24 cities. So we give some founders, access to these events. And our events have 80% investors in attendance. So it gives them kind of like a unique exposure to investors.
Is there an event in Paris soon?
Well, there's actually one tomorrow. Funny you ask.
Okay. Can I get a ticket?
You may. Let's discuss.
For sure. And so I get it. So you are pretty hands off, but your community can be hands on, which means that they can really support startups. I guess for the next section of this, I was curious to learn a bit more about your investment thesis. What are the places that you want to invest in? I mean, I'm thinking about it as like if there's a funder listening right now, like, how can they get money from you?
Yeah. So what we've seen right now is first we had to survey our investor community, the 400 investors, to understand where were their interests. The two largest buckets, very generally speaking, are energy and agriculture. Those are the two main ones where I would say like 60% of our investors invest in there. And then we have a few investors that are looking at, nature tech, circularity, segments that are a little, I wouldn't say niche, but still, up and coming. So I think we definitely do more energy and agriculture deals. And then we will still do a few of the others, but we obviously want to service the interest of our community.
I'm curious, you have 400 people in the community. How do you build intimacy? Because I believe relationship works well when there's like one-to-one or like, maybe it's small groups, but it's hard to stand out in like 400 people community. Like if there's a WhatsApp group, I wouldn't send a message because there's just way too many people. Like, how do you do that?
No, that's a good question. Typically, all our events are actually less than 40 people.
Okay.
And often we actually host them at investors' homes. So the fact that it's at someone's home, it makes it very intimate and much easier to connect. Online, it's a little harder, right? So we have, groups by city. We have groups based on interest. But I would say we always encourage our investors to actually show up to our in-person events because those are the most intimate ones in people's homes. We had one in New York a couple of months ago in the penthouse of one of our investors. So it's like you get to see a cool New York house. At the same time, you get to be on a couch chatting with someone as opposed to from a stage. So it's much more intimate. Like our typical format of how we host events is very intimate.
And is there a minimum requirement to join the community? Because obviously not everyone has a penthouse in New York.
No, it's just that investors, we just require that they've actually have done deals in climate.
Okay.
So what happened at the beginning is that we would have a lot of, for example, big family offices that hadn't actually done any green transition that wanted to be part of the network to learn, which is fair. But we got a lot of backlash from the community saying like, no, if they want to be part of this, they should have shown that they are committed already. So now we've decided to, make sure all investors have already committed some capital to climate in order to be in the community. And then when I talk about hosting in a penthouse, it's more that we try to pick locations that are exciting,
obviously,
so that people show up.
No, obviously. And I mean, if you can do it, why not doing it? I guess you are in 24 cities now, soon to be 40. How do you pick a city to open? What are the exciting cities for you where climate happens?
So there are two criteria there. That's a good question. One is strategic for fundraising. So for example, we're opening up a few cities in the Middle East right now. And other is more focused on education. So, making sure that for example, we had a request. So this was an inbound request from Cape Town could we be an ambassador in Cape Town? So Cape Town was not an immediate thought for us we should be in Cape Town. But because we got this request and we thought maybe we'll be serving the local community by connecting them to our global network. So we do that too. So to simplify the answer, it's both strategic for fundraising, like the Middle East, but also more focused on education and supporting local communities to make sure that they're connected to the big financial hubs.
So you pick cities based on fundraising needs and then local needs. Is there anywhere in the world where you think climate tech companies have an edge over other companies? Are there any cities that are a bit more advanced in climate?
Absolutely. So if you look at climate tech, it follows tech.
Yeah.
So the cities that are where you're most likely to find good opportunities in tech would be, obviously San Francisco, London, Berlin, Paris now as well. So climate tech is the same. It follows the same thinking. So the best deal flow would be, I would say, in those cities. That being said, you also sometimes you have some companies that stand out from markets like Australia or Singapore that are also worth looking at. So you can't make a total rule, but usually it follows the same traction as tech would.
Yeah, and it helps to have a co-founder in Singapore for Asia and the Pacific part of the world. Going back to the companies that you've invested in, what are the type of companies that you've done 5 deals so far. Is there one example that you would like to share the story, how you guys met and, what convinced you to invest in that company?
Yeah, absolutely. So, we have a lot of investors in our network that recommend deals. So, for example, we have, the Earthshot Prize in our network. We are also nominators for the Earthshot Prize, Prince William's Environmental Foundation. And so, for example, we get a lot of applicants from the Earthshot Prize. And so, we had an event. We try to do events in collaboration with big events like Change Now or Earthshot Prize. And so since that, we've had a good relationship. So a lot of our deal flow comes from Earthshot Prize. So one of the investments we did is a seaweed company that came from the Earthshot Prize based out of the Philippines. And, it's quite interesting because seaweed has application in a lot of different verticals, like cosmetics, food, feedstock as well. Mm-hmm. And what's interesting is 90% of seaweed actually comes from smallholder farmers. So you would think there's something much more industrialized, but it actually comes from smallholder farmers. So one of our investment, the last one actually, was for a company that does exactly that.
So what's the playbook to build a community?
So I would say three things. One is have very strict rules that really differentiate you and make you very niche, to start like that. The second one is having a volunteer leadership model. So, all our ambassadors are investors themselves, and they want to get to know our members. So we have a win-win with local ambassadors, which is a model used with YPO and other big networks. So have a win-win with your community leaders. And then the third one, I would say, make sure you really enjoy, building relationships and building communities, because like I said, it should be something that you have a unique advantage at, right? So think about, is that really are you doing this a push, or is this something that really excites you? So yeah, I would say those three things.
Especially if you're going to scale. I mean, you're going to have so many relationships to maintain anyway.
Exactly. So you have to love it.
Cool. Well, one last section for this episode. You've heard it before. It's the fire questions.
Ooh,
You'll have a couple of sentences maximum. Let's say one sentence maximum, if possible, to answer any and all of these questions. Are you ready for that?
I hope so.
What's the most underrated climate solution right now?
Women.
Oh, wow. I love this one. What's one founder you will bet on for the next decade? There's someone that comes to mind. Nothing.
Not yet. Have not found that person yet.
The most common mistake early stage climate investor make?
Following others.
What's the most unexpected thing that happened while building the community?
That it grew so fast.
Best investment advice you received so far?
Make sure the founder knows how to raise capital.
Interesting. The best innovation you've seen in climate?
I don't think I've seen it yet.
If you were now an investor / community builder, what role would you take in the environmental transition?
What role in terms of the vertical, or in terms of?
Founder, corporates.
If I could do any of them?
Farmer, whatever. Press, journalist.
I would still say entrepreneur. Like, the founders have the hardest jobs, and I think those are the ones that we need the most.
What's one thing traditional VCs misunderstand about investing in climate tech?
Well, that the timelines are much longer. It's not like investing in a SaaS business. A lot of climate innovation is hardware-based and takes much more than a typical SaaS investments.
The biggest barrier to accelerating climate tech?
The lack of capital.
A piece of advice for a founder entering the climate space?
I would say, network with all the right people, and make sure you're building your company for the right reasons.
Love that. And then one last question for you today. What are the 3 most important things to be a successful impact investor?
Your network, your deal flow, and I would say your personality.
If people want to reach out to you, if they love this episode, they want to submit a company for investment or join the community, where can they do that?
Absolutely. Our website is investorsforclimate.com. You can submit a deck there if you're a founder at seed stage. And if you're an investor, you can apply to join the community on the website as well.
I love that. And then the last question for you today, who's the next person that should be in your seat?
For
an interview.
Who should be in the next bit? Carmel Raffaelli
from
the Table VC in London.
Okay, lovely. I'll reach out. Thank you so much for today. I had a blast discussing with you. I think there's a beautiful model in like just taking people, a lot of people, and then bringing capital to the startups. I think that will really help them. So I'm glad you're doing it. and keep doing it. That was a great episode. Listeners, if you like this episode and if you like the show, don't forget to like, comment, and subscribe. Thank you so much.
Thank you, Hugo. This was really great.